Hello, my name is Matthew Copley with Copley Financial Group, and I thought it'd be fun to do a video about who is better for the stock market, Joe Biden or Donald Trump. And this will be a fun one today. I'll try to keep it as little political influence as possible and just kind of talk about what's going on with the economy and what the potential result is going to be. I get a lot of feedback from clients that say, hey, if Joe Biden gets elected, isn't the stock market going to crash? Or maybe they'll say, well, if Trump gets reelected, don't you think there's going to be a bunch of riots in the streets and all kinds of problems? And so I thought I'd do a video on what my take is on who is better for the stock market. And it's important for you to understand the difference between the stock market and the economy. They're two separate things. And so when we talk about the stock market, this is stock prices going up, the value of your investment portfolios. The economy is something different. And so I want you to understand something, and this may surprise a lot of people, that Joe Biden is not bad for the stock market. And in fact, I believe that Joe Biden would probably be more beneficial, at least in the short term, for the stock market than even Donald Trump. And the reason for that is Joe Biden has a proposal for $2.5 trillion in new stimulus. This is the plan. And even though it's obvious that a lot of Joe Biden's proposals, which is more taxes, higher corporate taxes, and a larger regulatory burden, more regulations on businesses, it looks like the additional stimulus would outweigh those negatives. And so it's important to understand that all this additional stimulus that the government creates is going to stimulate the economy. We're going to talk in just a second about how it works and how it stimulates the economy and how they're essentially doing this. But it's important to understand that additional stimulus really boosts the stock market, and this is what's happened since the coronavirus hit and the economy crashed. You've got this big increase in stock prices, and we've just about recovered everything since the crash in March. And so, why does that happen? What's going on? And I also want you to understand that when I say that Joe Biden would be good for the stock market as far as stock values, I also think Donald Trump would be very good for the stock market as far as stock values, because Donald Trump is not a fiscal conservative. He wants a lot of stimulus too. Maybe not as much as Joe Biden, but he also is calling for additional stimulus for the economy. So it's important to understand that additional stimulus is going to boost stock prices. Maybe not good for the economy in the long run, but in the short term, it's definitely going to boost stock prices. And before I tell you who's better for the stock market, Donald Trump or Joe Biden, we also have to talk about the Senate. And this is important because in the event that the Senate stays Republican and Joe Biden is elected, then we're going to have gridlock. And so there's not going to be a whole lot getting done because you're going to have a Republican Senate and you're going to have a Democrat president, and vice versa. If Trump gets reelected and the Senate becomes Democrat controlled, then again, not a lot's going to get done. And so gridlock is probably good for the economy because less government intervention, less regulations is probably good for the overall economy for the average person, but is not good for the stock market. Gridlock will be a problem for the stock market. Stock market will have a lot of challenges, and so gridlock is bad for the stock market either way, whether it's Trump or Biden, vice versa. However, if we get Trump reelected and the Senate stays Republican, you're going to see a lot of the Republican stimulus come through. And vice versa, if Biden gets elected and the Senate switches to Democrat, then we'll probably see even more stimulus come through, especially since the Democrats are pretty much guaranteed to control the House. And so if all three become Democrat, then of course a lot of that stimulus agenda will go through. And obviously, stimulus is going to benefit certain groups of people, and it's going to hurt other groups of people, depending on who that stimulus is going to. And I want you to understand kind of what's going on with the economy and why do we need all this stimulus. I thought the economy was recovering and everything's great. And despite the picture that Trump likes to paint, that the economy was the best it's ever been prior to the coronavirus, and the picture of the economy is recovering. The economy is not in good shape fundamentally. So if we look at the fundamentals, it was not in good shape before Trump got elected. And I think a lot of the reasons Trump got elected is because he called out correctly that the economy was a bubble and it was artificial, and all the things the government and the Federal Reserve did since 2008 kind of created an even bigger bubble. And now, of course, that he's president, now all of a sudden he's benefiting from the bubble and all these low interest rates and everything else. So now it's the greatest economy ever. So some of the things that he talks about is how unemployment has gotten better, right? Unemployment, he actually had unemployment drop drastically under his first few years, and it got all the way down to around 2%, which is the lowest unemployment rate I think that the United States has ever seen as far as the official numbers. And of course, with coronavirus, that spiked all the way up to like 15%. So you've got this big increase in unemployment. Now all of a sudden we've got a lot more people going back to work, and the unemployment rate has dropped down to about 7%. So of course Donald Trump says, hey, well look, all these people are going back to work. We got this huge record number of people going back to work. And of course the Democrats would say, well, wait a minute, you still haven't even got even close back to where it was before the coronavirus hit. So, unemployment obviously is a lot higher today than it was in the past. And in fact, it's not much different than what it was at the bottom of the 2008 crisis. So unemployment is still very high on a historical basis. Obviously, it's a lot better than it was a few months ago, right after this shutdown of the economy. And there's a few things that they're pointing to, not just unemployment, but one of the things I saw recently is they're touting this record business applications. So the number of businesses that are applying to start a business is actually at a record high right now. Huge numbers of business applying. And how can that be, right? We're in the middle of a coronavirus and all these restaurants are shut down. How can there be a record number of business applications? And I think there's an easy explanation for this. At the end of the day, all this stimulus, $2.5 trillion Biden's proposing, I think Donald Trump's at $1.8 trillion. What happens is when there's a lot of money that the government's creating, everyone's going to go out and try their best to get a piece of this money, right? It just makes sense. If there's going to be money available, the government's providing, we're going to go out and try to grab as much of that money as possible. And of course, if one of the ways to grab that money is to have a business that gets a bunch of stimulus checks and stimulus money, then that's a thing you want to do. You want to go out and start a business. So these new business applications, I don't believe for 1 minute are businesses that are going into business to try to start a business and do something with the economy. I think they're businesses that are in the business of ripping off the taxpayers. They want to get their piece of the stimulus, and so they're creating these businesses, or really scam businesses, that are going to apply for stimulus checks. And when you have this much money going out, it'll probably get lost in the shuffle, and a lot of these businesses will probably get away with collecting a bunch of stimulus money. And so that's why I think the record business applications are there. And of course, some of the other things we're looking at, just here in September, we had record retail sales. The number of things being purchased by Americans is up quite a bit. Everything from automobiles to everything else that's out there, they're buying a ton of stuff. And what's interesting is at the same time we have this record retail sales, we also have a big drop in industrial production, in manufacturing. So essentially what's happening is Americans are buying a lot more stuff, but we're producing a lot less stuff. Well, how can that be? How can we be producing a lot less stuff but yet we're out buying a bunch of things? Well, what it boils down to is the world has this economic pot, and people are producing. They're out making things and providing services and making products, and they're putting it into this economic pot. And then people are buying things out of that economic pot. Well, when you create a lot more stimulus, right, money out of thin air, that people can go out and buy things, what you're doing is you are allowing Americans to put less into the pot, and allow them to take more out of the pot. Who's producing all this stuff that we're buying? Well, it's foreigners. It's people that are manufacturing stuff outside the United States, and we clearly see that in the current trade deficits. We've got huge trade deficits going on right now, and this is basically the amount of goods and services we're providing the world versus the amount of goods and services that we're consuming. And so, how long is this trade deficit going to last? Well, it seems to be pretty large now, and it's probably going to be even bigger once the October numbers are out. And so, how can the Americans, who we got all these unemployed people, these businesses that aren't doing, how can we be spending more money, taking more out of the economic pot? What's going on here? How can the stock prices be up? Well, it's real simple. The stimulus is really two things that is happening. One is government checks to unemployed people, right? Direct stimulus. This is where they're out putting money out in the economy. And it's not just government checks. There's all kinds of programs they're doing right now that people can qualify for to get extra money. Business programs, the small business loans, all these things going on. So money is going out as a direct stimulus. People are able to take this money and spend it. And so a lot of unemployed people were getting these stimulus checks. Some of these people are getting a lot more money on unemployment than they were when they were working. And I personally know people that are in this situation, family members that are collecting a lot more on unemployment than they were when they were actually working. So this is additional income for those people. But also employed people are getting a huge stimulus as well. And what that is low interest rates. See, people that are still employed are taking a look at their mortgage loans and saying, hey, I'm paying 3.5% or 4 or 4.5%, and now I can refinance and get 2.8%. Well, we just did a loan. In fact, yesterday we had one close at 2.875%. And when you have loans at that low of a rate, obviously a lot of people are going to go out and refinance their loans. And some of them are going to take cash out and they're going to pay off debt, allowing them to spend more money. Even if it's just a rate and term refi and they lower their payment from $2,000 a month to $1,600 a month, well, that's an extra $400 a month in their income, and they didn't do anything. They got the same house, same everything. They just replaced their old mortgage with a new mortgage, and now they got a better deal. So these low rates are stimulus, and the government is creating these low rates by just printing money out of thin air. They're buying fixed income securities on the secondary market, driving rates down. So this is benefiting people that own houses that can refinance that mortgage. So you got those two things working. You got direct stimulus checks, you got the low interest rates. Obviously, Americans feel wealthier. They're able to go out and spend more. We had a 1.9% increase in retail sales just in September. Everyone's buying everything, so great. Everything looks good in the economy, but unfortunately, it's really stimulus, borrowed money, and so on and so forth. So this can't last forever. So you've got this trade deficit. We're buying a lot more stuff. We're producing less stuff. That can't go on forever. The other thing we need to look at is what's called the budget deficit. And what the budget deficit is the government spending versus the money they're taking in taxes. And this, of course, is at a huge number right now. That we have massive budget deficits. And so the government's spending a lot more money than they're taking in taxes. And, history shows us there's a very strong correlation between trade deficits and budget deficits and inflation and the dollar. And so whenever you have big trade deficits, whenever you have big budget deficits, this is bad for the US dollar. The value of the dollar is going to drop. And whenever you have trade surpluses and shrinking deficits, the value of the dollar is going to strengthen. So then the dollar is going to be worth more. And we know what happens over time. I mean, if we go back to when Richard Nixon took us off the gold standard in 1971, the value of gold was $35 for 1 ounce of gold. And today it's $2,000 for 1 ounce of gold. So this is inflation over time. And sometimes that inflation heats up and we start to see the reflection in the prices. And so at the end of the day, deficits are bad for the dollar. This is going to be a bad thing for the U.S. dollar. And at some point, we could see a big drop. The dollar has no support right now. The government just wants to print a lot of money. We got all these stimulus with the low rates and the unemployment checks. And of course, they may keep trying to do this, right? They're talking about having a universal basic income. They're talking about just printing money out of thin air and giving it out to everyone. And of course, this is something that clearly benefits people in the United States, because the US dollar is the world's reserve currency. So, more than half of all the dollars that are out there are actually outside the United States. So if we take $500 million and create this new money, and Americans are able to spend this money, it's actually not going to be $500 million in inflation pressure on the dollar. It might only be $250 million, because at the end of the day, half of those dollars are being deflated and debased around the world. And how long is the rest of the world willing to put up with this? And I sometimes say this from time to time: how can the rest of the world be so dumb to allow us to just print all this money out of thin air? Well, don't underestimate how dumb the rest of the world is. They, this thing can continue for a long time. You can go back and look at history throughout all of these time frames where stuff like this has happened. There's famous history in ancient Rome, and there's stories of how the carts laden with all the products from Asia and Africa and the Middle East and India all was coming into Rome, carts full of goods. And then what was leaving Rome were empty carts. And so that's kind of what we have today with the United States. The bottom line is this can't last forever. How long is it going to last? I don't know. Japan has managed to keep interest rates low for a very long time. They managed to kind of keep this their whole economy kind of afloat inside of a big bubble. I think that's the plan. The Federal Reserve is going to do their best to keep rates low forever and keep running up deficits and see how long they can get away with it. How long will the rest of the world put up with it? I don't know. But at this point, the fundamentals are clear. You want to be in investments that are not going to be heavily impacted by a dollar crash. And really, I could see the dollar really losing a lot of its purchasing power in a short period of time. And so if that happens, you certainly don't want to be in cash. You don't want to be in bonds. And all a bond is a future dollar, right? And here's a bond that we buy today, and it's going to mature in the future. All you're doing is buying future dollars, and you get a little bit of interest today, not much, right? 10-year Treasury is less than 1%. So you're not getting paid a whole lot for those future dollars. So really, any investment outside of dollars and bonds is probably a better investment. And unfortunately, a lot of people today are keeping way too much money in cash in the bank. They're buying bonds because they're afraid of the stock market and volatility. And so this seems to be what they're doing. And I think it's a big mistake. I think you're going to see at some point the dollar drop in value, and you are going to have a real problem. Now, of course, we've got specific investments we like in this environment where we think that the dollar is going to potentially have a problem. And I do want to point out before I tell you what those investments are, which our clients are heavily invested in, I do want to point out a big bubble that is formed in the stock market, even though I think stocks probably will do well in an inflationary environment. I think it'll be certain stocks that do well. Currently at this time, we have a massive bubble in the stock market. And a lot of this has to do with what are called index funds. People have been investing a lot of money in these index funds. In fact, some of our 401ks, that's the only options we have, is to invest in these index funds. And we've gotten to the point where it's become really kind of ridiculous, the market weighting. I remember when I started in this business back in the year 2000, I remember that it was this big deal that 18% of the whole stock market was just 5 companies. Back then it was different companies, generally. Like Microsoft's still in there, and it's the same company, but the top 5 companies in the S&P 500, out of 500 of the biggest companies in America, the top 5 represented 18% of the stock market. And there were papers written about this. There was this big deal that you had such a large market capitalization in just 5 companies. And of course, we had the dot-com crash, and that all came down. And of course, value stocks got real popular. And the next few years, they significantly outperformed growth. And today, that number is 26%. So you got the top 5 companies in the S&P 500, Amazon, Apple, Google, Facebook, Microsoft, that represent 26% of the whole value of the stock market. So when you have that big of overweight, what happens is when people are buying into index funds, they're putting 26% of their money with 5 companies, and the rest of their money is all going to 495 companies. So there's clearly a bubble here, and this will get adjusted at some point. So that means you want to invest in value stocks. You don't want to be in these companies that are just got ridiculous market valuations based on the company's actual underlying value. And so at the end of the day, it doesn't really matter whether Trump or Biden wins the election. I think both of them are probably going to be good for the stock market, but it's going to be bad for the dollar. And so the US dollar is probably going to be the casualty in this. And obviously, if we have a gridlock where you have the Senate and the presidency, different parties, obviously that may be pretty negative for the stock market. But again, if we have both the same, I think the stimulus checks are going to roll out and the dollar is going to have a problem. So one of the things I am watching, and the election may have a big impact on this, is what's going on in Davos, Switzerland in January. The World Economic Forum is got a big event. They're calling it the Great Reset. And it looks like they're really kind of pitching this thing as a big deal. Like Plaza Accord, Bretton Woods kind of big deal. This is what the talk is anyway on Wall Street and in the financial world. And I think what they're going to try to push is a digital currency. I think they want to get rid of paper dollars. They want to get rid of coins. They want to have a digital currency where everyone buys everything with a app on their smartphone. And so I think this is going to be the push. And of course, the government wants this because they want to be able to keep track of everyone's dollars and where everything's going. They want to make sure if you're renting a room out for cash, you can't do that. You got to pay your taxes. Or if you've got a job where you're collecting a bunch of tips, they want to make sure you're paying your tax. And of course, they want to be able to track anyone who's doing money laundering, that's a drug dealer or something like that. And of course, they want to track, kind of what's going on in the economy. Hasn't worked out too well for China because they've abused that power. And of course, people that they have a social credit score where they turn off people's money or don't allow them to travel on a train or a plane if they say bad things about the government. And of course, that one of the ways they can do that is they have control over everyone's currency through a digital type of a currency, and that's the potential thing that privacy advocates are going to push back against this digital currency. But I think the election will have a big impact on what happens at that event. I think if Donald Trump gets elected again, you're going to see that a lot of those plans are probably going to get pushed out. You probably see a 2025 plan for digital currency. I think if Biden gets elected, I think that the digital currency is going to be, they're going to try to put that through during Biden's first term. And so we'll look out for that. And if we see anything like that happen, we're going to try to get out in front of it and position the investments either way, no matter who gets elected and what happens. Obviously, the areas that we think are good investments at this point, especially with the idea that the dollar may have a problem, are value stocks, companies with good dividends. Obviously, we want to be in blue chip companies, low debt, good balance sheet, good cash flow, good dividends. And right now, they're cheap compared to some of the high-flying market capitalization companies that have just gone to the moon, like the Amazons and Googles and companies like that. So value companies, and believe it or not, international is looking very good now. And I know that for a long time I talked about how I want to invest in the U.S. I don't trust international accounting and so on and so forth. But international is looking really good right now. In fact, we just rotated the tactical fund. Gradient moved their tactical fund, which a lot of people are in, and my own Roth IRA and a lot of our clients' money is in, just moved over to international value companies. And so we've seen that transition. So I think international will do much better, especially if we have a dollar that is under pressure. We'll see international do well. And of course, the third area, which will do very well, and we obviously, for those of you that are clients, we're overweight precious metals right now. gold and silver are certainly going to do really well in an inflationary environment. So you've got historically, precious metals is a place people go when they think that there's a potential problem with the US dollar. And of course, if you look around the world in areas where you have real problems with the currency, like in Venezuela or in Turkey, you see precious metals just doing very well in those areas because people are afraid of debasement of their currency. And another area that seems to be picking up a little bit is Bitcoin. I think people are kind of pushing this as a digital alternative to the currency, and so people are jumping on there. I'm not convinced. I think that there's too much of a chance of the government coming up with their own digital currency and having rules in place that really are detrimental to some of the Bitcoin and Ethereum different options that are out there. But clearly people in Venezuela and in Turkey are putting money in these digital currencies as a safe haven to get out of the currency that their country is in. So that may be something to look at, but I'm not convinced. I'll stick with gold and silver. It's got a much longer track record than Bitcoin and Ethereum as far as a safe store of value over time. So that's what we're doing, and I hope this was helpful on kind of what we're doing with the investments and kind of what we're looking at. And again, don't worry about the election. It doesn't matter whether it's Trump or Biden when it comes to the stock market. I think either one is going to be beneficial for the stock market with all the stimulus. Now, we probably will have a lot of volatility around the election with the financial markets, especially if we have some kind of rioting or something that happens. And it doesn't matter if Biden gets elected, the other side's going to say it was rigged. And if Trump gets elected, the other side's going to say it was rigged. And of course, depending on the kind of the reaction. And there's a lot of talk that people are gearing up. This Black Lives Matter movement was just the beginning. And if Trump gets reelected, they're all going to come out in force. So be safe out there, be careful. I think it's a good idea to kind of stock up on everything you need, just like you did before the coronavirus, and make sure that you can kind of ride out some of the craziness that might happen around the election and after the election, especially if it's real close and we have to get the Supreme Court and everyone else involved in it. So be safe out there, and feel free to call the office if you have any questions about your investments, and we'll be happy to answer those for you.